It's the day before January 1st, 2026, and you're looking for guidance with your DSCR loans, and you're not quite sure where to go. Are you going to use DSCR loans exclusively? Are you going to go back to your local bank and actually utilize their programs? Or are you going to go straight cash? Or even better yet, to supplement some of your purchases, you might wholesale. Let's get into 2026 and really hit the ground running. So guys, welcome back to the Chasing Financial Freedom Show. I'm Ryan Dement, your host. I look forward to having some great open discussions with you guys, but let's get to it. It's the day before we go into a new year, and you're working on your 2026 plan still, and you still have questions. One, do you continue or do you start using DSCR loans? And I can already hear you guys talking to me and telling me DSCR loans are too expensive. Let me ask you a question. How much is that loan going to cost you if you can't close the deal with your local bank? Your local bank will let you finance up between 4 and 10 properties, depending on your current income, your debt to income ratio, your tax returns, your bank statements, all the things that a traditional home buyer has to show to be able to buy a property. With a DSCR, all you're showing is one, the entry point is your credit score. It's bank statements, 2 months worth of bank statements to make sure that you've got money to close on the deal and reserves, your EIN number, which is your tax identification number, your executed operating agreement for your LLC if you're closing an LLC, and then we just need to get an appraisal, just like you would do at your local bank. That is it. And we can close those in 2 to 3 weeks, not 4 to 6 weeks or longer. And the beautiful thing about this is when you're working with a DSCR loan compared to a bank, we know how quickly you're going to be able to get through the process and get approved because your credit score gets you in the deal. You have enough reserves, you have enough cash in the bank to close on the deal, 20% down, you're good to go. The only caveat here, and this is the only piece that we cannot control, is the appraisal. The appraisal has to come back on the number, but you have that same challenge at your local bank. Now, I hear you saying this, my local bank is going to give me a better rate. Yeah, but they're also going to cap you out on the amount of loans that you can actually have. And two, let's say you do decide to go to your local bank and you're on loan number 4 and you get through and you're like, Ryan, I want to go buy a house for myself. Guess what's going to happen? All of those loans that you have on your credit bureau for your investment properties now, unfortunately, count against your debt to income ratio for your personal property. And what will happen? More than likely, a bank is going to decline you because your debt to income ratio is too high. What do? That's where you have to say, what's the cost of money and the cost of losing a deal to yourself? And do I go about the DSCR loan and not go to my local bank? So if you're shopping and hunting for rates, then your local bank is going to win every single time. If you're looking for ease to be able to close deals more frequently, to make sure that you're cash flowing at a 1.25 DSCR ratio, make sure that you need minimum paperwork to get into a deal, then a DSCR loan is for you. But then the other piece of this, let's go into number 3, cash. Maybe you've got some cash sitting on the sideline that you want to use and say, hey, I'm going to go buy it cash and go through that process. That's awesome. No mortgage, no debt. I love it. But how do you scale that? How do you get that capital out of that asset? Oh, you got to do a refinance. You got to do a cash out refinance. If it's less than 6 months, you can do delayed financing. And that would be based upon what you paid for the property. So you could get your money out after 6 months. But let me ask you, you still are going to have to get a loan. Whether you go to your local bank or you get a DSCR loan, which will be better for you for scaling. You're capped out between 4 and 10 loans at a local bank. DSCR, there's no cap. So you continue to grow your portfolio. Now, let me put a caveat. When I say no cap, there are some lenders that truly have no cap. You can own 100 doors and they could care less. There's some that'll do 25, some will do 50, some will do 15. But if you're working with the right mortgage broker or lender, he or she's going to know where to go to ensure that you don't hit that cap, especially if he or she's already asked and understands what you're trying to accomplish with your business. Another thing, is your local bank sitting down and talking to you about what you're trying to accomplish with your business, how you plan to grow it, and then what your projections look like for 2026 and beyond? I don't know. Not saying they won't do it. I'm just telling you, most local banks will not, because that loan officer that you're dealing with at the local bank is on salary. He or she might get a small bonus based upon what they bring in, but ultimately they're not incentivized to get you the best deal and continue to close because they're not bonused. They might be, but they're not working on any type of commission structure. No. Let me put a little myth on this one. Most or many DSCR lenders, non-QM lenders, do not allow you to go borrower paid, where they stack the broker's pay into the loan or into the rate where you don't see it. It has to be borrower paid, which shows up in box A on your loan estimate or your closing disclosure. It's fully disclosed. If you're working with somebody on a DSCR loan, more than likely, he or she is going to have to disclose their pay up front in box A. Now, there are ways around that. There's direct lending to where you can balance the front end box A and the back end. I didn't say all, but there are some lenders that will let you go lender paid where you see absolutely nothing in that box A. And I know I'm talking jargon, but I'm also giving you guys a little bit of inside baseball when it comes to working with loan brokers or just brokers in general, or even I'm a direct lender too. I can work with lenders on a direct basis and go that route and what we call as a correspondence loan, which allows us to balance out our compensation on the front end and the back end. Investors always say, I need a direct lender. Guess what? Direct lender can't always get you your deal done, because if you're not in a box for them, you are no good. Your credit score is not above 700. You're not doing an 80% loan to value. Maybe you've got a triplex or a quadplex. They don't do them. They only do single family. You're in a rural part of town. They won't touch it with a 10-foot pole. You've got a property that is very interesting when it comes to sketch and square footage. So there's a lot of limitations when it comes to your local bank. But ultimately, your lender broker should be working for your behalf and being able to shop lenders for you to get you your best deal. We have access to over 200 lenders. Not all of them do DSCR loans, but a majority of them do. So we're able to shop and figure out who provides the best rates, but also the best value for our clients. Now, here's the other thing, and we'll wrap this up real quick. DSCR loans do have prepayment penalties. There are options to where you do not have to have a prepayment penalty. That will come with a higher interest rate. Just what it is. So that is a downside. Not saying DSCR loans are perfect. Every loan has an upside and a downside to it. DSCR loans, yes, you can find that interest rate will be typically higher. Typical prepayment terms are anywhere between 1 year and 5 years. Now, is that a downside? Potentially, but if your broker lender has asked you the question, how long do you plan to keep the property? If it's more than 3 years or 5 years, the prepayment penalty is perfectly fine, because it's typically a tiered prepayment penalty. So if it's 3 years, in the first year, it's a 3% prepayment penalty. In the second year, it's 2%. And in the third year, it's 1%. So 3, 2, 1. If it was 5 years, it'd be 5, 4, 3, 2, 1. So there's that. Guess what? You can get paid to refer wholesale deals to myself that close. we can put you on a marketing manager program. And what will happen is all the deals that you actually refer to me that get closed through your wholesaling, you can actually get paid. So you're going to actually get paid for your wholesale fee. And then we will work out in writing in a contract for every deal, how much you get paid on the back end for referring deals to me. So look at that. If you want to get in and out of the business, be able to make some Johnny side hustle money, you can actually do a referral program for me. You cannot be a licensed loan officer. So if you're a licensed loan officer and you're wholesaling, can't do it. No way. But you could come join us at Nexa and you can be part of the team. So guys, hope you guys had a great 2025. I look forward to working with you guys in 2026. Have a happy new year. Be safe, be healthy. I'll see you guys in 2026.